Blockchain technology is powering a growing wave of innovation. But it's also creating some overwhelming questions, like how do I manage risk, solve criminal cases, understand my customer? The answers are on the blockchain. But how do you make sense of disconnected transactions that look like code? That's why we pioneered blockchain analysis. We've been mapping on-chain data to real-world entities since 2013. Using clever machine learning and dedicated forensic experts, we're building the world's most trusted blockchain knowledge graph, just as search engines did for Web 2. Customers across finance, government, and Web 3 all around the world use our solutions, data, and services for complete blockchain awareness. Understand the full context of transactions and your exposure to risk. Track illicit movement of assets across chains, smart contracts, and mixers. Employ deep insights to expand your customer base and defend against competitors. The future of finance is already here. We'll answer all the hard questions together.
All right, thanks everyone for joining part 1 of our crypto crime series of 2023. We are going to be talking about cryptocurrency-based crime impacts on national security today. First, some webinar logistics. Will this be recorded? Yes, the recording is held and available on demand in our resource center. Do you want to improve your accessibility? Turn on closed captions and select your preferred language. Will there be time for questions at the end? Yes, submit questions via the Q&A feature. And do you want to hear from us after the webinar? Did you like what you saw? Please click the Request Demo button to hear from our team. And today you're going to be hearing from me, Kim Grauer, Director of Research at Chainalysis, and Eric Jardine, Cybercrimes Research Lead at Chainalysis. The Crypto Crime Report, which you can download for free on our website at chainalysis.com. Again, we are doing a 2-part series of the Crypto Crime Report. The first part focuses on themes related to national security. We will talk about our high-level crime numbers. We'll go into ransomware, hacking, money laundering, and sanctions. And then next session, we're going to focus on themes related to consumer protection. We're going to go into scams, pump and dumps, darknet markets, fraud shops, and Oracle manipulation. Let's start with the high-level numbers from the crime report. Cryptocurrency-based crime hit an all-time high in 2022, with illicit addresses receiving $20 billion over the course of the year, up from $18 billion in 2020. On this chart, what we show is the total value received by each crime type that we track. Human trafficking, child sexual abuse materials, ransomware, stolen funds, sanctions, terrorism financing, scams, cybercrime administrators, fraud shops, and darknet marketplaces. And we look at and we put all of these addresses together that Chainalysis has worked hard to attribute, and we simply say how much cryptocurrency was received by these addresses. And the most striking trend that we see in 2022 was how all of these addresses combined hit an all-time high. But you'll notice there's a lot of diversity of subject matter and the value that is received by all of these different crime types. So it's helpful to go into a little bit more detail on how each of these different crime types has changed over the years. And that's what we do in this chart. What we are showing is the year-on-year percent change in value received by crime type. And each year there tends to be kind of a theme that arises. In 2021, for example, we called it the year of the hack, when stolen funds between 2020 and 2021 grew over 500%. The year before that, we called it the year of the ransomware attack, where the value received by ransomware funds grew almost 400% between 2019 and 2020. And what's unique about 2022 is that almost all types of illicit activity are actually in decline. Everything except for stolen funds, which saw another year of growth, and we'll talk more about that later, and sanctioned activity, which saw such an exponential increase that we had to exclude it from the graph because it was in something like the 100,000% year-on-year growth. So it would have just made it impossible to read this graph. So we removed it. So everything is in decline except for these two categories, which together caused us to hit all-time highs for criminal activity received in 2022. Another important number that we look to is, how do you interpret $20 billion? It's kind of a little bit hard to, is that a lot of money? Is that a little money? Is this good or is this bad? How much US dollars are associated with illicit activity? So we realize that it's really important to put this number into context. And the context that we do is we say, what percentage of the overall crypto ecosystem is associated with illicit activity? So we take that numerator, which is the total value sent and received by illicit wallets, and we divide it by the total amount of economic activity that is happening on the blockchain. And what's an important trend to notice here is that ever since 2019, we've actually kind of been in decline in terms of the total share of overall activity that is associated with illicit wallets. 1.9% in 2019, down to 0.43% in 2020, down to 1.12% in 2021. And then all of a sudden in 2022, we've seen this growth again, an increase to 0.24% of all crypto activities associated with crime. And even though we saw that growth, I think it's pretty important to highlight that this is actually still very low. Less than 1% of all of the transactions that take place we're able to show are connected to illicit wallets. Now, we like to kind of lead with our methodology and some caveats to our methodology, because it's important to just understand what the limitations to your data are. The first thing that people say when they look at our numbers and they kind of are following our research is they say, your numbers look different from where they were, what you published last year. Why is it in last year's report you said there was $300,000 in ransomware in 2021, and this year you're saying there's $600 million in ransomware? And the answer is that our numbers are always improving. So we're always finding new services. We have automated heuristics at play that are looking for associations between different wallets. So today, those automated heuristics are making associations between wallets and expanding our kind of coverage of known services. And we're also constantly removing noise. So what does it even mean to have an economic transaction on the blockchain? We have to remove stuff that's not actual transfers between two individuals, but rather we only want to count things that are not kind of administrative transfers or things that aren't economically interesting. And there's also limitations to our data. And this part is pretty important to understand. The first limitation is that our numbers in this report, by and large, are only reflecting criminal activity that is native to the blockchain. A darknet market transaction that was received, or a transfer from a hack. But it's not including is, let's say there is a drug cartel that uses cryptocurrency to move money across borders. To capture that, we're going to have to use a more investigative approach. But because unless the wallet is tagged as illicit in our system, it's not going to be included. So now we're going to kind of dig into each of these subsections. So starting with the biggest kind of headline number from this year, we're the only category to see growth from the previous year in the amount of money received. Is hacking. So like I said, hacking has hit an all-time high. $3.8 billion was received by hackers, was stolen by hackers in 2022. And that is following really exponential growth between 2020 and 2021. We call 2021 the year of the hack, or the year of the DeFi hack. And we had kind of said, hey, we think that this can't go on. There has to be some slowdown. Probably that slowdown is coming soon, or else people are really not going to be comfortable investing their funds in some of these specifically DeFi protocols that are getting hacked. But we did not see that slowdown at all in 2022. And the amount of hacking continues to hit unprecedented rates. So why is that happening? The first clue as to why that's happening is by looking at which types of platforms are the most susceptible to hacks. And on this chart, we see each year the number of hacks broken down by the victim profile. So we have just a wallet, a token protocol, a private hack, a DeFi protocol, and a centralized service. And similar to 2021, 2022 has seen mostly DeFi protocols getting hacked. This is a continued trend from 2021, and the vast majority of these DeFi protocols getting hacked are from incidents related to code exploits. A hacker can go in, and because all of these DeFi protocols are running on open source software, they can parse through the code and look for vulnerabilities and then take advantage of those vulnerabilities. Another point that I think is worth highlighting about this chart is that we're in a similar time now in 2022 in terms of DeFi hacking as we were in 2019 for centralized service hacking. So you'll notice in 2019, the vast majority of the hacks were of centralized exchanges. And if you were around in this industry back in 2019, you'll recall that the most insurmountable problem for the industry was vulnerabilities in these centralized exchanges. But the industry has largely adapted and adopted security, prioritizing cybersecurity, and has improved substantially. Now we're in a position where this needs to happen for DeFi. But another major culprit, another major reason why we saw this growth in the amount hacked was because of North Korea. The North Korean hacking organizations have been more active than ever before. $1.6 billion was hacked by North Korea organizations alone, and recall 3.8 billion was hacked in total. And so the vast majority of the reason why we saw a surge from 2022 to 2021 can be attributed to the North Korean hacking organization's success in particularly DeFi hacking. One of the more interesting things to note about these North Korean hacking organizations and what is really powerful about blockchain analytics is that since we are able to identify, Chainalysis is able to identify which hacks were carried out by North Korea, oftentimes based on tells from the way they move their funds after an attack was carried out. Same deposit addresses being used, same strategies of how they're using mixers, for example. We're able to also get really good at understanding how North Korean organizations plan to exit the ecosystem with their stolen funds. And like I said at the top of the call, with the Axie hack, we were able to seize in one day, we were able to seize $30 million in this one hack. And so being fast and following the money and basically in real time tracing a hacker and how they're choosing to move their funds becomes crucial especially if you're hoping to recover those funds. So North Korean hacking organizations have used a lot of different money laundering strategies over the years. They pioneered using low KYC exchanges for moving hacked funds early on in the crypto days. Now they're pretty heavily reliant on mixers and kind of layered money laundering strategies. And they were almost entirely using Tornado Cash throughout 2022 until the closure of Tornado Cash, when there was an industry reckoning and a need to find what is going to be the next money laundering solution. And North Korea kind of notably turned to a new mixer called Sinbad, which Chainalysis is live tracing, in addition to kind of other mixers that are maybe smaller but or new. We coined a term mom and pop shop mixers, which are ones that have spun up and might not be as tested, but are still capable of receiving funds. And they have been turning to some of these new mixers. And this is really important because with an organization like North Korea, time is of the essence. So you have to kind of know who you're dealing with when you're involved in one of these investigations. All right, so Qubit was an example of a North Korean hack from this year. Qubit was a South Korea-based DeFi lending protocol built on the BNB chain, and it also ran an associated protocol, the Q Bridge, that allowed users to use assets on other chains as collateral. Unfortunately, as has happened in many cross-chain bridges, hackers found an exploitable error in the code governing the Q bridge over here on the left. They were able to drain the protocol of its holdings. About $80 million was drained from the bridge by North Korea. And then we would get this wallet controlled by the hackers labeled in our system. These attackers quickly used Tornado Cash to move their funds, sent those funds to more intermediary wallets. Then they utilized a decentralized exchange to swap the funds and create another layer in the obfuscation stage, and then move on, and then ultimately get those funds to a centralized exchange. 4 different centralized exchanges, as we can see here on the right. It should be noted that this is likely the desired off-ramp for most types of criminal activity. They want to convert stolen crypto to cash, and there are a few places to do that. The centralized exchanges that have that banking ability, so they can convert crypto to fiat. So even if you use an intermediary stage like a DeFi protocol, your end goal is likely going to be a centralized exchange. So moving on to ransomware. Payments down as ransomware declines for the first time since 2019. Up here on the left, what we're showing, and this is really a special data set that's a very hard one and gathered from partnerships and hard work by our data intel ops team. We are one of the few, maybe only, companies that has this view of how much ransomware is happening. And that's because of, like I said, our partnerships and the way that we collect data, and we put it all in this one central place. And if we look at all of the money received by ransomware wallets, basically every single year since 2018, we've seen a growth in the amount of ransomware payments that have been received. Except until 2022, we saw not only a decline, a really, really, really steep decline in the amount of ransomware that was received by ransomware attackers. Does this mean that probably we would not have expected to see this if we had we thought that ransomware is going to continue to grow as the ransomware as a service business model continues to scale. Ransomware as a service business models are you can sell a ransomware attack on the dark web. So you don't have to be a cyber expert in order to carry out a ransomware attack. But it's not necessarily the case that ransomware attacks are in decline. Rather, what we're starting to see is that there's been a decline in victims' willingness to pay. And this is confirmed by some research provided to us by an awesome company called Coveware, which looks at the percentage of all of the incidents that they've seen where the victim was paid or did not pay. And the percentage of victims that paid has declined pretty quickly over time. We've also seen reduced insurance payouts because of sanctions. We've seen improved data backups, so less of a potential loss of the data if there is a data backup. And we've also seen disruptions from the Russian invasion of Ukraine in the sense that some of the operators might have actually turned their efforts or been disrupted from the actual Russian. We know many of these these ransomware attackers are Russian, and so maybe they've been turning their attention elsewhere. That is just kind of speculation that we've been hearing when we've been talking to people. Another thing to note is even though there's ransomware is a really big problem in the industry, what Chainalysis has been able to do is actually find that the vast majority of ransomware attacks are carried out by fewer actors than you might think. So in this chart, we're showing that at least 50% of all of the value received by ransomware attackers has been received by just 5 different strains. And an interesting thing about this chart is you can see the ebbs and flows of the dominance of different ransomware operators. So on the left, we see the payments to Conti, which is a very prominent, the biggest strain in 2021. They declined following Conti's announced support for the Russian government in February of 2022. And then new strains like Royal, Black Basta, and Play emerged following Conti's demise. And we also saw Hive, which is another strain, saw a large spike in activity as victims became less willing to pay. All right, so the final thing that I think blockchain analysis is really good at is there have been what we highlighted in the crime report is some research that Microsoft Security did on analyzing the actual malware code of some of these ransomware attacks. And they were able to find connections between these ransomware strains to further show that with this ebbing and flowing between different strains, this isn't necessarily someone is a part of a ransomware attack and then their strain gets shut down, so they're just done with ransomware. Rather, they will then actually just hop onto a new strain and carry out attacks using that new strain. So again, it's more concentrated than you would otherwise think. And so Microsoft Security analyzed the malware and was able to draw connections between these different strains in order to show that, hey, maybe these are carried out by the same attackers or written by the same developers. What blockchain analysis can do is kind of jump on that and say, let's look at connections, follow the money, actual transactions connecting these different strains together to see if we can find associations between these strains as well. And so on the left, we see Dharma, Conti, and Alpha Black Cat are consolidating in one ransomware affiliate's wallet. The same thing is happening on the right. These are both Conti. So we talked about how Conti experienced some disruptions related to around the time of the Russian invasion, and they have ultimately started to potentially shut down. we can see where the affiliates are migrating to after. So what's the strain that they're going to jump to when one shuts down? And so blockchain analytics can actually find these connections to different wallets just by following the money and using the transactions that are moving these ransomed funds. Okay, so the last section I'm going to talk about is money laundering. Crypto money laundering. Four deposit addresses received over 1 billion in illicit funds in 2022. This is just a note, this is a very data-driven section, so bear with me here. One of the very cool things that we do in this section is like what we did in the start, we take all the wallets and we say, okay, how much did they receive? The next thing we can do is we take all of the wallets and we say, where did all of those funds ultimately wind up on? And we have the capability of tracing through all of the paths that the money is using until it reaches a conversion point or an off-ramp. And this is showing the year-on-year typical destination of illicit funds after it was received by that illicit wallet. There's a lot here and a lot to dig into depending on what your interest is. What I see is the central role of centralized exchanges in off-ramping funds. But we can also point to an increase in the amount of funds flowing to DeFi protocols, which actually simply has to do with, we can show it on this next slide. What this is showing is the destination by crime type. So stolen funds is the main user of DeFi for converting funds. And the reason for that is a lot of times hackers don't care what assets they steal. They'll just get access to a wallet and steal whatever assets are in it. And a lot of times those might be what we call like the long tail assets. And then they're kind of forced to use a decentralized exchange to convert those assets into something like maybe wrapped Bitcoin or wrapped ETH. But each crime type tends to use a different type of laundering mechanism. Stolen funds, mixing, and DeFi, mostly DEXs. Scams almost always are just plugging directly into centralized exchanges. And that is because typically a scam is a little bit less sophisticated than maybe a ransomware operator. They just want the access to the liquidity of the centralized exchange, and oftentimes are not no one knows they're a scam for a while, so they don't really need to obfuscate, so they can just plug in directly to a centralized exchange. And this is in terms of value is the vast majority of funds that are going to, or in the past has been a substantial source of illicit funds moving to centralized exchanges. And then we see ransomware is using other illicit services. So are darknet marketplaces, other illicit services to move money, maybe launder the money, or maybe reinvest in other, in purchasing other goods. It really kind of depends. Probably I do want to drill in a little bit before I pass it over to Eric on the role of centralized exchanges in laundering funds. What we can look at is which exchanges are behind the movement, are allowing all of these funds to exit. And for the first time since 2015, we're actually at the highest point in terms of the percentage of overall funds that are going to the fewest number of services. Funds are concentrating on fewer services, fewer centralized exchanges than ever before. What the chart is showing is the percentage of funds going to just 5 services. Nearly 70% of all of the illicit funds that are being off-ramped are going to just 5 services. And that's growing. I think we can speculate on why that is, but it's most likely because there are fewer options. We've seen a lot of improvements being made on behalf of centralized exchanges in terms of improving compliance procedures. And there's just a awareness that this compliance needs to be prioritized for centralized exchanges. And that has reduced the number of available options for bad actors to move their funds. They have fewer options of centralized exchanges that they can use. And what's more, they also have, we can also measure which deposit addresses on those exchanges are receiving the vast majority of the funds. So it's not necessarily just an exchange problem. You can isolate how many deposit addresses on that exchange are receiving those funds. And this is a chart that we update every year. We tend to see a persistent concentration in the amount of funds that are flowing to just a few deposit addresses. So over here on the right, we see that this is a little bit of a confusing chart, so bear with me, and download the report and read more about it if it will help you. But there are 4 deposit addresses that received over $1 billion in illicit funds in 2022. Here we've got 36 received almost 900 million. So we've got concentration in the number of services and concentration in the number of deposit addresses. And I think that this is a real, it shows where there's potential room for intervention going forward, and where the kind of the weak points are for this industry and how illicit funds kind of exit. So with that, I'm going to pass it over to Eric.
Thank you, Kim. And hello, everyone. It's my pleasure to be here and to speak a little bit about some of the sanctions research that's included in the Crypto Crime Report this year. And as Kim noted, 2022 was quite a large year for sanctions. In particular, to unpack some of the numbers before we dive into some of the research that we did, we had $8.9 billion worth of observed sanctioned funds flowing on the various blockchains that we track. And that was, as Kim mentioned before, that was a 150,000% increase year over year from 2021 to 2022, hence why it was not on that earlier chart. So what I'd like to do before jumping into some of the research results is just clarify a couple of points to do with terminology, just so that we have a sense of, when we're talking about sanctions, who's imposing the sanctions, what being a target means, what interacting with the target means, and all of that. So sanctions in this context are a result of action taken by the Office of Foreign Assets Control, which is part of the US Department of Treasury. And OFAC has a special designated individuals list, and that list is used to essentially indicate that a entity, so it could be an exchange, it could be a individual, it could be a mixer, as we'll talk about, is part of a sanctioned effort on the part of the United States government. And the implication of sanctions is essentially both compliance and legal risks. And so if you interact with a sanctioned party, either sending them money or receiving funds from them on a blockchain, then you're in violation of the sanctions order, and that can have some fairly serious consequences. And so one of the things we observed with sanctions in the course of 2022 was a fairly sizable expansion, not just in terms of dollar values, but also in terms of the sector size and sanction rationale of OFAC. And so what I mean by that is essentially OFAC in 2022 began to sanction a wider array of sectors of activity. As we'll talk about, darknet markets, mixers, and exchanges all fall into that bundle. These entities were also significantly larger, as Kim alluded to earlier, than what we've seen in the past. And the rationale was fairly broad, in this case, sort of clustering around malicious cyber activity, which I'll get into in a second. And so suffice to say, 2022 was certainly a sizable year for sanctioned activity, and the Office of Foreign Assets Control was certainly expanding their effort across the ecosystem. And so to really quantify what we're talking about there, if we wanted to drill down into inflows in 2022 and how they break out across the pre-sanction designation category of the target of the sanctions. What we have there is basically three making up the bulk or the lion's share of inflows for the course of 2022. Mixers, darknet markets, and high-risk exchanges being the three. And if you wanted to take those category labels and graft them onto real-world names, what we're dealing with here is a mixer called Tornado Cash, which, if you'll recall from the hacking section, was heavily leveraged by the DPRK as they were trying to launder stolen funds. High-risk exchanges, which in this case grafts onto the name Garantex, which was still in operation exchange based in Russia. And then darknet markets, and that grafts onto a marketplace called Hydra Market, which was shut down as a part of a larger enforcement effort corresponding with its sanctioning in April of last year. And they too were involved in fiat off-ramping and money laundering for ransomware gangs, and were sanctioned under Cyber 2, which was one of OFAC's orders. And so if we dive into the broader question from total inflows and which were the big ones, and actually take these three named entities, Garantex, Hydra, and Tornado Cash, and look at where they were getting their funds from, we can split this up in a couple of different ways. We can do this at what I like to think of as like a genus level, so a higher order categorization of illicit, licit, or legitimate, and risky. And this gives a sense of the sort of inflow profile for these three services. And so what you see with something like Garantex, for example, is that only around 6% of its inflows were per se illicit as we track it, with a large majority being legitimate or illicit, and a fairly sizable amount being risky. And that profile kind of contrasts with something like Hydra Marketplace, which was a darknet drug market, plus these fiat off-ramp / money laundering services, which had a very sizable, around 68% portion of its inflows being illicit. And then Tornado Cash is predominantly illicit or legitimate with these spikes. And what's interesting to sort of contextualize these numbers is that 6% inflows into an exchange is a massive amount. And so while Garantex's inflows in a proportional basis are relatively small, in dollar terms, they're actually quite large. And they were linked with Russia's invasion of Ukraine, and also involvement with illicit laundering of funds tied to ransomware gangs and cyber criminals. Hydra, obviously, as a darknet market, lots of its inflows are per se illicit. And Tornado Cash's spikes, those tend to correspond with hacking activity by the DPRK. And so you have sort of a differential inflow profile here, but when you sort of dive into some of the details, you can start to see why each of these might have attracted the attention of OFAC in the first place. We can go one level down in terms of granularity from this higher sort of order categorization into specific subcategories as they exist in our data. And there we can see that 99.7%, for example, of those illicit inflows that we just observed were actually to Tornado Cash, were actually from stolen funds. And that, again, it fits with what we observed with the DPRK's money laundering strategy, where most of it, through most of the periods in 2021, 2022, were flowing into Tornado Cash. That's represented here in a different way. And then you can see as well for both Garantex and for Hydra that they had wide-ranging exposure to a variety of other illicit service categories. A couple of notable ones in terms of proportional basis would be, for example, Garantex having a large exposure to scams, in this case in particular, a scam called juicyfields.io. And Hydra Marketplace sort of sat astride the darknet market and fraud shop ecosystem. So fraud shops like Brian Dumps were sending large volumes into Hydra. Other marketplaces that were also involved in drug exchange were also sending money into Hydra. And again, in addition to their involvement with ransomware, money laundering, they were sort of providing these fiat off-ramping services for a wider array of illicit actors in the ecosystem. And so in all three cases, it's clear on one level why OFAC would have designated these three as sanctioned entities. And so beyond tracking these inflows and the sort of risk profile associated with each of these services, another thing that we did in this section of the report was actually start to dive into the question of what happens after you see something like a sanctioning event in play. And so we can measure this out on a few different dimensions. One dimension that we paid a special attention to in the report was just an aggregate inflow dimension. As I mentioned, when designated as a sanctioned entity, engagement either on the inflow side, so that it would be sending money into a sanctioned service or receiving money from a sanctioned service, presents both legal and compliance related risks. And so it's reasonable to assume if you're using sanctions as sort of a tool of punishment that you might expect inflows to dry up. Now, one of the things that we did in plotting inflows to these three sanctioned services that are sort of the focal point of activity in 2022 was observe that the effectiveness of sanctions at ceasing inflows is somewhat dependent, and it depends on a few things. One is whether the imposition of sanctions is part and parcel of, say, a wider enforcement effort. And that's what we see in the case of Hydra Marketplace. So Hydra was sanctioned on April 5th, but it was also shut down on April 5th at a server level due to the action of German law enforcement, which seized those servers and shut them down or commandeered the site. And so in the case of Hydra, we see a really steep drop off. And as we'll talk about in the next webinar, in terms of darknet markets, there was a lot of implications of Hydra's closure for what happened in the darknet market ecosystem. But suffice it to say, when sanctions are coupled with wider enforcement efforts, they're quite effective at disrupting the activity of these services. And while it may seem benign to say inflows dropped significantly once the servers were seized and the site was closed, it's important to bear in mind that the wallets remain up in operation. So you could send money into Hydra wallets if you knew what they were, or Hydra addresses. And so it's possible to make financial transactions even if the darknet site itself is inoperable. And so it didn't necessarily have to drop to zero, but in this case, removing the service window from the site and then imposing sanctions did the trick. With something like Tornado Cash, what we see is a general decline in inflows. And we're going to talk a little bit more about how this breaks up at a subcategory level, but it's sort of a story of a service that remains, technically speaking, up and in operation, but which has a significant drawdown in its activity, largely due to, we'd say, the imposition of sanctions. And then you have a story like Garantex. And Garantex is interesting because they pushed back on OFAC, sending out Facebook posts and tweets essentially to the effect of saying we are not subject to U.S. jurisdiction and do not serve U.S. nationals, and therefore we do not, for lack of a better term, care that we've been the subject of sanctions. And we can break down these inflow numbers, which, as you can see, generally increased after the sanctioning event, and we can unpack from where those funds were actually coming. And so if we look at that subcategory level, not looking at total inflows, but inflows by subcategory, or we can actually tell a lot about the effectiveness of sanctions and how it might distribute unevenly in terms of its effectiveness across actors in the ecosystem or entities in the ecosystem. And so in a chart like this one, what we did was essentially set on the x-axis the pre-sanctioned inflows to 0%. Those would be the orange dots, and the category labels tell you how much went into Tornado Cash. From the y-axis labels, unhosted wallets, tokens, smart contracts, et cetera, et cetera. And what we're doing here is essentially showing how pre and post inflow levels differed by category. And the one that I draw your attention to in particular is how you have 100% drop in exchange inflows, falling from 41,495 in the period before the sanctioning event on August 8th to the equivalently lengthed period after the sanctioning date, which is about 60 days on either side. And so what's interesting about that is exchanges are KYC and AML regulated. And as a result of that, there's a compliance risk associated with sending money into Tornado Cash in any direct sense. And therefore, what we see is perfect compliance with the OFAC sanction designation. And so that's sort of a contingent story that's sort of embedded in what we're talking about here, where essentially imposition of sanctions leads to very good compliance from well-regulated entities, in this case, exchanges. Now, scams is obviously an outlier, moving in the opposite direction in this case, where it increased about 260%. And I would say in that particular case, it's important to contextualize what we're talking about here. And that was not a massive inflow of scammer funds across a wide array of scams. That was a single scam, single, in this case, YouTube giveaway scam that over the course of 4 deposits sent money into Tornado Cash. And so it wasn't a big substitution towards the service. It was something a little bit more discreet and may have been, a scammer unaware of the new sanctions designation associated with Tornado Cash, for example. Now, it's a different picture if we look at Garantex. And as you'll recall, the general trend with Garantex inflows, even post-sanctioning, was upward. And what we did in the report is detail how part of that increased inflow picture that we observed was actually a result of risky and illicit services continuing or increasing their engagement with that particular high-risk exchange based in Russia. And so a few things are interesting to note here. One is that with scams and darknet markets, what you actually observe is not just a continuation of engagement with Garantex, signaling something like a breakdown of deterrence, but instead an actual increase in inflows. And so in both cases, this would be the left-hand column on the screen. In both cases, you see fairly sizable growth in terms of the amount of money being sent from darknet markets or scams into Garantex. And that could be a result of Garantex's reaction to OFAC sanctioning, that they essentially, as I mentioned, signaled that they don't care about the imposition of sanctions that might make them a good off-ramp target for illicit actors in the ecosystem, in particular, in this case, darknet markets or scams. With something like unnamed, which I generally categorize as risky services or fraud shops, I would say in those cases you have a continuation of engagement without much indication of the sanctions having any sort of deterrent effect. And with something like ransomware, which is a little bit more episodic corresponding with payments, you may see an increase post-sanctioning, but it's sort of unclear whether it's just a function of a couple of big inflows or not. But suffice it to say, at a level of using sanctions in order to punish, it looks like Garantex and their reaction sort of put up an open for business sign to the illicit actor ecosystem on chain. And the final thing that I'll talk about here is a separate part of inflows and sanction-related activity, but it has to do with not disrupting the target of the sanctions per se, but their counterparties. And so as we've talked about in many different ways throughout the course of today, one of the things we're interested in when imposing sanctions is their facilitation of cyber activities, malicious cyber activities, and particularly their off-ramping of funds. And so what we did was set up a baseline measurement group. And from that baseline measurement group, we contrasted the performance on chain of counterparties to entities that were targeted by sanctions. And generally speaking, in this particular case, which I would think of as like the disruptive effects of sanctioning on illicit actors, we see a pretty much across the board positive effect in that, let's say, ransomware groups perform significantly worse if they were counterparties to sanctioned entities than we would have otherwise expected. And so we see this across every category but fraud shops, indicating that the imposition of sanctions on things like Tornado Cash, Garantex, Hydra Marketplace, those have meaningful effects in terms of disrupting on-chain illicit activity. And so with that, I will turn it back over to Kim.
All right, that was awesome. I think just one question. We only have a few minutes for questions, and we have a lot of questions. So, Eric, can you just, maybe you did this, but someone asked to clarify the difference between sanctions and sanction evasion.
Absolutely. So, sanctions would be the formal designation. So something which OFAC would put out, and they would designate other individuals, countries, entities, addresses, something in that bundle of things. Sanctions evasion would be sort of working around sanctions in order to nevertheless engage with these entities. So just as an example, if you wanted to be sending funds to Garantex for some reason, you'd be evading sanctions if you were attempting to do so by leveraging a series of intermediate hops, mixers, other services of that sort. And then being not in compliance with sanctions would be just sending funds directly into a sanctioned service. And so with Tornado Cash, you do actually run into some interesting things we could talk about, but we won't because of time. But essentially, the dusting of celebrities who had ETH addresses was technically a sanctioned violation and led to some clarification of what was going on in this particular case.
Great. So another question we got was, do we see a downtrend in crime categories having to do with kind of the crypto winter? And that's an awesome question. It really depends on the type of criminal activity that we're thinking about. So scamming, and Eric's going to cover this next time in our next presentation. We see scams move really closely with the market in the sense that many of the scams are investment scams. And so to the extent that investment is down in a bear market, the amount captured by scams is down. If you take something like darknet marketplaces, that's actually what we call price agnostic. So the decline there was due to Hydra market closure and other law enforcement wins that just shut down the actual marketplaces and disrupted activity that way. Hacking is also price agnostic. You are a hacking organization and you hack regardless of the price, although it might kind of impact you on the margins. By and large, it is it's going to get carried out no matter what the price of cryptocurrency really is. And then, each of the other types are less connected with price than scamming. I guess the other way it would be connected is the value of the assets hacked are lower when you're in a bear market, but the amount hacked is completely or the assets that are stolen is just dependent on what you get access to. Okay, so let's see here. We've got time for a few more questions. Let's see here. Okay. 1 second, I'm just scrolling to. We've got interesting questions on if we see novel methods of obfuscation. And I think that what I will say on that is there are hundreds of different ways of obfuscation that we see, and probably on the frontier of the most creative ways of obfuscating funds is going to be your North Korean hackers or your ransomware actors who are deeply incentivized to obfuscate funds, and then you might see a lesser sophisticated actor like a scammer or a darknet market customer who doesn't need to go to such great lengths because they don't have a business behind what they're carrying out. So there will be lesser sophistication there. So we tend to look for novel methods in the more sophisticated actors like North Korean hackers, and that are always leveraging the newest technologies, the newest DeFi protocols, the newest everything to move their funds. Let's see here. Eric, do you see any that you want to answer? Here's one. Can we talk about hops? How many hops away from a transaction, whether directly or indirectly, would be considered to be safe? And I'm not a compliance person. The Chainalysis detects what we call exposure through infinite hops. So there's not going to be a limitation in the number of hops that you are able to see. And for those of you who don't know, a hop is basically like one jump to a wallet. So 2 hops would be a transfer to one wallet and then another wallet. Chainalysis looks at infinite hops. And so you're given the tools to make that decision kind of for yourself. And I think that what I've seen from compliance is it's more of kind of an art than a science, where there's not really defined sets of how you determine the risk profile. There's many other things you should take into consideration, like what types of exposure are there, how active is the user, things like anomaly detection. Does the user receive funds and then immediately clear out their wallet? That which might be considered suspicious because the wallet is just being used as like a step to layer, to basically a layering step. So yeah, hopefully that kind of answered the question. Okay. How do you oh wait, do we have time? Oh wait, sorry. It looks like we're actually at time. We've got a lot of really good questions. It's kind of like incredible to scroll through them all and see all of the interest. So we'll feel free to follow up with us directly if you want to learn more or request a demo or see how our products can help you with your crypto kind of nexus. And yeah, thank you guys all so much for coming. It was really awesome.
Thank you, everyone.